Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking foreign exchange in the age of Trump with Jeremy Stretch, Chief International Strategist at CIBC. The markets are braced for big swings once Donald Trump takes power today. The dollar has been rising since the US election and last week hit a 26-month high as traders price in both higher growth and higher inflation under Trump. He's planning to sign executive orders as soon as Monday that could move the greenback, including on tariffs. So how might the currency markets react? Let's ask Jeremy Stretch of CIBC. Jeremy, hi. Are you expecting these first policy movements to lead to fresh dollar gains then?
Well, obviously, we've seen a substantial appreciation in the value of the dollar, as you've mentioned, over the course of the last three and a half months. It was very much the case that as we started Q4 last year, the markets really started to amplify expectations of the Trump presidency proving to be enacted in terms of that vote in the beginning of November. We've seen that extended into the end of last year and the beginning of this, and the dollar trading those extremes. The question is, are we getting pretty close to the sort of the top in this terms of dollar cycle? Because, of course, we're not only talking about what's happening on the tariff side, but we're also talking about the markets repricing the Fed, and that's also had a substantive impact on the dollar's valuation. So we've been paring back or reducing rate cut expectations, and that's helped to buoy the dollar. But the question is, are we near the top of that cycle? I think we probably are, but I think we are set for a degree of volatility because, of course, we've already had news at the beginning of the year about selective tariffs proving to be downplayed, and then subsequently talk of gradualism. And for now, at least, that's limiting some of the immediate fears about what the tariffs are going to bring.
Are we reaching a point, Jeremy, where the strength of the dollar would become a net negative for the US economy?
Well, it's kind of interesting, of course, because one of the reasons why Trump is intent on bringing in tariffs is to try and make the US more competitive and to try and reduce some of those trade imbalances. So, in a sense, by making the dollar stronger, making those US exports less competitive, then that does prove to be rather counterintuitive. So, it is very much the case that, of course, anything that Mr. Trump wants to be associated with has to be bigger, better, stronger than anything else in the rest of the world. But, of course, correspondingly, trying to send the dollar higher will only make those trade imbalances potentially worse. So it is very much a balancing act. And that, of course, is going to be the very difficult task that Mr. Bessent is going to have to try and circumnavigate as he moves into his role as Treasury Secretary.
A key part of the balancing act, of course, is with China. The yuan was higher this morning after reports of a positive phone call between Trump and President Xi. But do you expect China to use its currency to offset those potential tariffs?
Well, clearly, if we are going to see significant tariffs put in place, and of course that has been previously already been a modus operandi of not only the Trump first administration but also Biden's, then there is a risk that the currency could be used as an offset, so to try and alleviate some of those tariff pressures. Because of course the Chinese administration are very much governed about their own growth trajectory, because of course that's important and implicit to the maintenance of economic and political stability domestically in China. So I think it is going to be a case that China may well allow the currency to depreciate a little further were there to be substantive tariffs being imposed. But it is interesting that this mood music from this first phone call, at least, does seem to be a little bit more positive. So it'll be interesting to see whether that can or will be carried over as we move into the first stages of Trump 2.0.
What about the gap between the dollar and the euro and indeed the British pound? Are we going to see a widening gap in interest rates as those central banks cut while the Fed does not?
Well, I think there's an interesting point there because you're right that the Bank of England and the ECB are still very much in a cutting phase, albeit the Bank of England's been relatively slow in that regard. But I think we can and should expect further rate cuts, potentially up to 100 basis points from both central banks this year. But I think where there's a little bit of market mispricing is in the context of what's priced for the Fed. Because as I've mentioned, one of the reasons why the dollar has rallied as markets have taken off Fed rate cut expectations. But I think there is an underpricing of the propensity for the Fed to continue to adjust policy going forward, because, of course, the property developer that Mr. Trump has at his heart likes nothing more than low rates. And I think there will be incredible pressure on the Fed to ease policy. But I think as we start to move through the year, we do see the immediate impact of any tariffs starting to dissipate, and/or we see a slight moderation in terms of the exceptionalism that's really driven the US growth trajectory. I think that opens up the prospect of The Fed doing a little more than the market is pricing, and I think that will limit the degree of differential in terms of interest rate spreads, and that will help to limit downside for both sterling and also the euro against the dollar.
Jeremy Stretch of CIBC, thanks so much. And that's your roundup of foreign exchange under Trump. I'm Elena Casas, and this is Reuters.